To give you a sense of where we're going to go with this, first of all the presentations that have been made have been recorded. In some cases, we need to get from people their PowerPoints and so on. So this is all going to be curated by the OECS Commission into an electronic record of the meeting that all participants will get back as a video file. And maybe whatever written stuff there is, we'll do it as an ebook, as a PDF that will be shared with you. Second thing is that this is not just about the exposure to the experiences globally, the best practices, etc., but it is also about the impact of the ideas on where we go in the future within agricultural insurance. So the thinking there is we are going to be distributing some cards, these cards, and you also have, or you have it already, and you also have these pads that I think the hotel put there. So you can use this. You don't necessarily need to put your name it's optional. But any thoughts, ideas, questions, suggestions that you have, we'd appreciate if you put these up on cards and you put them in the boxes that we have. So at least for what has happened so far, you can feel free to, at random, post your thoughts, your ideas, your questions, your suggestions, and we will look at that and collate it. The second thing is on day 2, we're going to be using an app called Mentimeter. I suspect everybody here has a cell phone, correct? So either a cell phone or a computer. We will be giving you some questions in real time. It will be up on screen as well. And you respond to these. And as you respond to them, we will see instantaneously on screen the feedback coming from everyone in respect of that. So that would give us, very specific responses to some of the day 2 issues and so on. And we'll probably, in the Mentimeter, I'm suggesting that we have an open question that you can then respond to. So that would give us a series of sentence responses coming from you all. What we could also do if we have time towards the last day or the third day, is encourage you to get together informally by sectoral grouping. So I know there are representatives of development partners here. So if the development partners group, for example, come together and just share ideas, okay, how is this going? More importantly, what is the way forward? What are the indicators for the way forward that you see? So that that group can just give us a group. It doesn't have to be a well-written report. It could just be bullet points. But your thoughts on the way forward as a development partners group. If there are farmers in here from the farming community, what is your perspective on that? If there are young people in agriculture, what are your perspectives on that? Persons from ministries, what is your perspective on that? So that in that, and now some of you may cross several boundaries. So, you know, we would probably identify the groupings because we would have registration information. And then you can then participate in either one of these groups where you feel you want to get your voice best heard, or you can touch base with the other groups with whom you identify. Does that make sense? Yeah? Okay. All right, thank you very much. So we look forward to your feedback. And again, all of this is going to come back to you, so everyone will have full visibility of where we go in with this and what you've said. Thank you.
Thank you, Dr. Jules. For this afternoon's presentation, we're going to have a slight change around. In that the third presentation will be first, and so this afternoon's presentation, the first presentation this afternoon will be on improving African risk management systems and rapid access to predictable and innovative financing. And the second presentation will be entitled, Fisheries Insurances. And so the presentation on African risk capacity will be done by Mr. Binyam Tadasi, who is the head of research and development department of the African Risk Capacity Agency, where he leads a team responsible for developing a new disaster risk models, maintaining existing ones, and conducting in-country customization and capacity building initiatives. With over 14 years of experience working from the community to the continental level across multiple African countries in disaster risk management and insurance, Mr. Binyam's previous role includes serving as a senior associate at the Clinton Health Access Initiative, where he supported various health financing and insurance initiatives to the Ethiopian government, and as a program officer for the R4 Rural Resilience Initiative, a strategic partnership between the UNWFP and Oxfam America that reached a large number of beneficiaries with microinsurance and other resilience building and food security interventions. Additionally, Mr. Binyam held the position of Agriculture Microinsurance Unit Executive at a private insurance company known as Nyla Insurance SC, where he led a team focused on agricultural insurance product development, financial literacy, market canvassing, underwriting, claims processing, reinsurance arrangements. He also worked with the USAID's Feed the Future initiative on the design and implementation of innovative rural financing mechanisms that reduce post-harvest loss and disaster sales. Let me also introduce the second presenter, will be Sushita Upe. She works as coordinator for the FAO Support Initiative Global Network for Capacity Building to increase access of small-scale fisheries to financial services, particularly with a focus on credit, microfinance, and insurance services. As the network coordinator, she plays a critical role by organizing various programs and initiatives to advocate and create awareness amongst policymakers, financial services providers, Fisher Folk Association, non-profit organization, and academic institutions associated with the fisheries and aquaculture sector. Suchita is a fisheries development professional. She began her career as an assistant professor, Fisheries Extension Division at the Dr. B.S. Konkan Agriculture University in India. She was engaged in a lab to land research program to reduce fish waste loss, integrated fish farming techniques, training and capacity building programs for MSME fishery-related businesses. Suchita has a bachelor's in zoology from Wilson's College, Mumbai, and a master in fisheries administration and management from the Central Institute of Fisheries Education, India. Her main areas of interest are credit, microfinance, and insurance, fish value chain, and climate change adaptation in the fisheries and aquaculture sector. She has experience working in Asia, Central Africa, and Zambia. So let me first, therefore, welcome Mr. Tadasi, who is coming in virtually to make his presentation.
Thank you very much. I hope you can hear me. So I'll try to share my screen. Can you please confirm if you can hear me?
Yes.
Okay. So thank you very much. So I'll be presenting about the experience of the Africa risk capacity. So my presentation, I'll start by giving some background about the Africa risk capacity. And I'll also touch on the product offerings, the various products that we have at the African risk capacity, and the ARC model in terms of the approach that we follow to deploy our model in the countries that we work with. I will also talk a little bit about the customization, which is the process by which we work with in-country experts to adapt the model to the specific country context. And then finally, I'll talk about the results. So the Africa Risk Capacity Agency was established in 2012 in response to the demand for an African government for African mechanism for disaster response. And later in 2013, its financial affiliate, ARC Limited, was established, particularly tasked to do the insurance or the risk pooling business. So the ARC mandate is to help member states to improve their capacities to better plan, prepare, and response to extreme weather events and natural disasters. Currently, it also includes outbreaks and epidemics. So on the agency side, the service that we provide focuses on building our member states' capacity. It's a member state-based organization, and currently we have about 39 African countries as our members. So we build our member states' capacity around risk modeling, early warning, contingency planning, risk pooling, and risk transfer. So the risk pooling mechanism is believed to enable countries to reduce their emergency reserve need by enabling risk sharing. So that's one of the main benefits. So we also work, the work of the Africa Risk Capacity is enabled by multiple partners. Since this establishment, it was established with support from the World Food Program. And even right now, we work with multiple partners, including our member states. So as I tried to indicate in the previous slide, the Africa Risk Capacity has two wings. There's the Africa Risk Capacity Agency, which is a specialized agency of the African Union. So this African Risk Capacity Agency is, as I said, the member state-based organization. It's managed by member states, and the Conference of Party is the apex body of the African Risk Capacity Agency. So it provides guidance and oversight to the work of Africa Risk Capacity, and also it leads the political engagement, which involves onboarding member countries, African countries, to be a member of the African Risk Capacity, which involves facilitating the signing of the African Risk Capacity treatment and also the ratification. It also like primarily responsible for the capacity building work and operational monitoring as well. Although we put government at the driving seats and we implement our program through the government, we do what we call it operational monitoring, especially following an insurance payout in order to monitor the proper implementation of the insurance. So that assessing its effectiveness and efficiency of the process. So this evaluation or process audits will identify lessons and areas for improvement, which will be used to refine future insurance models and response plans. So on the other side, we have the African Risk Capacity Insurance Company Limited. So this is the financial affiliate, and it's domiciled in Bermuda and regulated there. And it carries out the risk pooling and insurance function, and it transfers this risk to the insurance and reinsurance market, and it also engages in other financial and asset management functions, which also includes non-sovereign insurance activities. So right now, the Africa Risk Capacity has 4 major hazards covered through its insurance and risk modeling products. So these products were developed based on member states' demand or member states' needs. So we have a product for a tropical cyclone. We also have a product on flood, which we are preparing to launch. We have drought products, which covers both crop and livestock agriculture or rangeland agriculture. We also have a product for disease outbreaks and epidemics. So the initial product or the first product that we have developed is a drought product for crop, which is based on an index known as Water Requirement Satisfaction Index. So this was the flagship product of ARC, and we have been having this product since 2014, and later on a product for rangeland agriculture was developed based on an NDVI targeting pastoral droughts in 2020. We also have piloted recently an anticipatory insurance, which is also again targeting drought in 2 countries in Africa, Malawi and Zambia. So this anticipatory insurance product, unlike the traditional form of product that pays out at the end of the agricultural season, it pays much earlier than the traditional product. And the purpose of the payout of this product is also a bit different from the purpose of the traditional product. So the traditional product usually is meant to support humanitarian response efforts, whereas the anticipatory insurance is more of like the payout finances to build resilience and to help householders diversify their livelihood source. We also have a tropical cyclone model. So the tropical cyclone model targets our African countries in the Southwest Indian Oceans. So the model was rolled out in 2020. So it's based on wind speed and storm surge. Again, we have a flood model. It's mostly a riverine flood model, where we have conducted a technical review of this flood model in 2023. And right now we are preparing to roll out this product. The outbreak and epidemic product is also another product that we have at Africa Risk Capacity. It was launched in 2020, and Senegal was the first country to take up a policy for all the 3 priority pathogens we have for the outbreaks and epidemics, which is Ebola, Marburg, and meningitis. And in 2024, the program would be expanded to engage more countries in West and Central Africa, and as well as in East and Southern Africa. So the ARC model, so the approach that we follow at ARC for a country to be able to participate in the insurance pool, there are certain steps that needs to be followed. So the first step is the customizing the risk model that we have at ARC. So this customization process is done by involving the in-country expertise, and the customization quality is reviewed both internally and externally by involving external expertise. So once the country has the risk model customized to their context and have the risk profile in place, we also expect the countries to have a contingency plan. So this contingency plan basically defines the intervention that will be implemented using the payout finance. Should there be a payout? So what are the activities that are going to be implemented using this payout finance will be defined in the contingency plan. So after that, then the country will have a risk financing and risk transfer discussion with our insurance affiliate, which is ARC Limited, to decide what percentage or what portion of the risk that they are exposed to they want to transfer into the insurance pool. So this is a discussion where we define that the trigger or the threshold for triggering insurance payout and all other risk transfer parameters. So once the country has passed through these 3 steps, then the country will get what we call it a certificate of good standing and best practice, meaning like once they have the certificate of good standing and best practice, then they can participate in the insurance pool. So for any country or member state to participate in the insurance pool, the country needs to pass through these 3 major steps. So as I said earlier, when it comes to customization of the model, we work with an in-country experts, in-country expert group, which we call it technical working group. So this technical working group basically brings together experts from relevant government ministries and partners. So we have experts in the area of contingency planning. So we want to have this in-country expert to be part of the technical working group. So this might include contingency planners, humanitarian response specialists, and social protection specialists. And for model customization, depending upon the type of model, for instance, if we are talking of drought, we will make sure that we have climatologists, agrometeorologists, agronomists, statisticians, food security and vulnerability specialists represented in the technical working group from different government ministries and partners. And for the risk transfer parameter or insurance-related discussions, it's usually the financial experts, insurance experts, and economists in the technical working group who are leading the discussion when it comes to risk transfer parameters. So we only provide technical support at the agency, but the ultimate decision in terms of like customizing the model as well as deciding how much of the risk the country wants to transfer into the insurance pool, and as well as from on the contingency front as well, picking the activities that would be implemented using the payout finance is decided more of by the in-country experts in the technical working group. So this is just to show the process we normally follow when we are customizing the model or deploying our model to any country. So we start with providing training to the technical working group, and then based on that training, the technical working group will customize the model. And then once the customization is finalized, the selected final risk profile and the customization setting will pass through a quality review. We have an internal quality review, which we call it CQR, customization quality review. And we also, from time to time, organize the customization review committee meeting where we bring external experts to give feedback to the in-country experts on the customization settings. So once we have an agreed risk profile, then risk transfer parameter discussion will take place where the country is deciding how much of the risk they want to transfer into the insurance pool. So the tool we have, our risk modeling tool known as Africa Risk View, enable countries to have access early warning information and also in real time monitor the performance of the season. So based on this, the technical working groups will monitor the performance of the season once the season starts. So they generate mid-season review report, end of season review bulletins or reports, and share that information. So this is a kind of continuous process, and the mid-season review and the end of season review somehow also acts as a ground truthing exercise where we also evaluate the performance of the model And if we identify something, that would be used in the customization review process to refine and improve the model further. So yeah, when we say customization, I think to just give you an idea of what we mean by customization, I picked the drought, the agricultural drought model, which we are using for crop agriculture. So we use a satellite rainfall dataset in our modeling software platform, which is Africa Risk View. And this satellite rainfall dataset, we have alternative satellite rainfall dataset, about 5 datasets. So the country technical working group with us, they run analysis comparing the different alternative satellite datasets with ground station data to decide which dataset they want to use as an input based on performance. So once that satellite dataset is picked and then throughout the growing season, using the WRSI, the Water Requirement Satisfaction Index approach, and this Water Requirement Satisfaction Index approach is a crop-specific approach. So the water requirement of the reference crop picked by the country will be compared with the actual amount of moisture available to the crop throughout the growing period, and that will form our index, the WRSI index, which basically shows us the drought severity in the country. So this is done at a grid level, at a pixel level, and this will then be overlaid with vulnerability information for us to be able to estimate impact in terms of estimated number of people affected and response costs, or what we call it model response cost. So this model response cost is the historical series on model response cost is what we call a risk profile, and it's based on that the countries define how much of the risk that they want to transfer into the insurance pool. So when we talk of customization, so basically what we are talking about is defining the parameters under our index, specifically reflecting the context of the country that we work with. For instance, I've talked about rainfall data. So for satellite rainfall data sets, running analysis to determine which satellite rainfall data set is representative or reflective of the country context will be the first step for the country to decide which satellite rainfall data set they want to use as an input in the model. And there are certain parameters related to agricultural practice, for instance, defining the domain of the project or the area that they want to cover through the insurance mechanism, which we call it a calculation mask, is another thing that we expect the experts to define, and other parameters such as water holding capacity, reference evapotranspiration, reference crop, the most widely cultivated crop in the country, which can serve as a reference with like food security importance, needs to be picked. And once we pick that crop and the length of the growing period of that crop and the planting window as to when farmers undertake planting, when they stop planting, needs to be defined, and also the planting opportunity. So what is the minimum criteria for farmers to plant? We have a 3-decade rainfall criteria to detect the success or failure of planting within the planting window. That also needs to be defined by the technical working group. So this is based on experts' knowledge, data, and simulation exercise to sort of like optimize the performance of the model. So on the vulnerability side, to estimate impact, we use a household approach. So based on household survey data, we try to have an idea of drought sensitivity in terms of like by looking at household income portfolio, percentage of income coming from drought sensitive livelihood strategies, and also the coping capacity. We use household poverty status as a proxy indicator for that in order to profile the vulnerability. Then like by combining the drought severity with the vulnerability, then we will be able to estimate impact. So ultimately, this is what we get. This is just an example as our risk profile, showing us either in terms of population affected, historically, the number of people affected by drought, or it can also be in terms of model drought response costs. So we then do our validation once we have our final results at various levels. So at the first level of validation could be the WRSI index itself. So as you may know, WRSI is a proxy indicator for crop yield. So we sort of try to compare our WRSI information with historical data on yield as a way of validating the model result. And the final output of the model, which is the historical number of people affected estimate that you see here, will also be validated with historical data on number of people affected to see whether the model is picking historical drought years at the right magnitude. So this is the customization exercise we undertake at the country level. So far, in terms of impacts or payouts, since its establishment, ARC has provided about cumulatively $1 billion coverage in risk coverage for drought and tropical cyclone. This figure is not updated in terms of payouts. I think the payouts, including the recent payout we made for El Nino in Southern Africa, is over 180 million so far. And more than 90 million people have been protected, and over 5 million beneficiaries have received support through the payout finance. Capacity building, the country DRM capacity has been improved because of the capacity building we provide in terms of risk modeling, contingency planning, and so on and so forth. And we also have come up with an innovative approach whereby, like, in addition to government is taking a sovereign policy, humanitarian partners are also involved, and they can also take out an insurance policy to expand the coverage. Gender mainstreaming is also another area where we try to really focus on at all levels. Countries are adapting Africa Risk View as an early warning tool. All of the tools that we have, the Africa Risk View for drought and the Flood Explorer and the Tropical Cyclone Explorer, they can also be used as a tool to provide early warning information. And also it gives some sort of like risk knowledge by giving the countries an idea of their risk profile. So countries are using that as a value added service. We are also growing our partnership with regional economic communities. We work with SADC, IGAD, ECOWAS, and other key stakeholders in terms of like jointly building the capacity of the countries, and also like coming together in terms of advocacy for risk financing and disaster risk management solutions. So these are just pictures showing you governments receiving payouts. So the first picture is the Prime Minister of Madagascar receiving payouts for the insurance policy that they took. And the second picture here, number 2, represents the Zambia Vice President receiving the payouts. And number 3 is Madagascar drought payouts, also received by government official. And number 4, the President of Malawi receiving payouts. So this is just to give you an idea of the results. And finally, this is just to show you some pictures from the payout implementation activity in Mauritania and Mali. So payouts implementation could take different forms. In some cases, it can be in terms of food distribution. In some cases, it can be a cash distribution depending upon the context. So finally, challenge impacting the ARC mandate. So one of the biggest things that we struggle with is the physical challenge of our member states, given that member states have competing priorities and limited physical space. The ability to pay a premium on their own is really a bit difficult. So we work with partners for premium financing, and as I said earlier, we also involve humanitarian actors to take policies to expand the coverage for the country. Limited understanding of parametric insurance and insurance culture. So this is another challenge we have. We work on awareness raising at all levels, from policymakers to experts in relevant government structures, and as well as to partners as well. Inadequate government policies, especially in the area of disaster risk financing. So we believe that insurance is not the only solution, and we always push for a risk layering approach. So for that reason, we work with countries for them to have a proper risk financing strategy in place, which also recognize insurance as one of the risk financing mechanism, but also other risk financing mechanisms also considered depending on the type of risk and the severity and the frequency of the risk that's being targeted. We also organize awareness raising sessions and policy dialogues for policymakers in the countries that we work with. Challenging political environment. So one example for this could be like leadership change, sometimes affecting the sustainability of the program, as we require to put a lot of effort to have a continued commitment for full participation. And insecurities in some countries also affecting the program implementation. For instance, you may have a case where a policy is signed, but when payout triggers, all of a sudden you have a coup in the country, making it difficult to make the payment for the new government because of sanctions, for instance. So we have these kinds of situations in the past, but we try to work with humanitarian organizations for payout implementation, of course, with the endorsement from the government. So yeah, so I'll stop here. Thank you very much, and I'll be happy to answer questions if there are any.
Thank you very much, Mr. Tadasi. However, the questions will be reserved for after the second presentation. I do have a question, so I'll reserve mine for that time also. So let me invite Ms. Suchitra Uper, who's also online, to make her presentation.
Hello and good afternoon to all. Are you all able to see my screen?
Yes, we are. Go ahead.
Okay.
Please.
Thank you. Okay. So, okay. So I'm Suchitra Ubre, and I'm the coordinator for the FAO-supported initiative, the Global Network for Capacity Building to increase access of small-scale fisheries to financial services. It's also called the CAFI SSF network. And my topic today is why and how can fisheries insurance be implemented in the Caribbean region. So the outline of my presentation for today is in 3 parts. First, I would like to highlight the summary outcome of an FAO conducted study, which is a world review of capture fisheries and aquaculture insurance that was published in the year 2022. And thereafter, the second part will be more on the Caribbean region's assessment needs for fisheries insurance. Again, this was a study conducted, and what has been the key findings and outcomes of that study. And finally, the third part will be about the options that are promoted by the FAO for introducing mandatory insurance in the Caribbean. So to begin with, as fishing is, as you all know, fishing is considered as one of the most dangerous jobs on earth and also a riskiest occupation. And according to a recent study, world over, each year, more than 100,000 fishers, including fishermen and women, die during the fishing operations, which comes to nearly 300 fatalities a day. And fishers often, as you all know, work long hours under harsh weather conditions, thus increasing the likelihood of accidents and injuries. And what more can I say, in the Caribbean with the recent hurricane that has come, it is much more evident now. So the climate change has made these hazardous conditions more frequent. The consequences obviously faced are damage and loss, financial compensations to affected third parties, loss of life, disability, income loss, employment, and destruction of not only aquatic environments but also the healthy fishes. Um, so moving to the world review of the capture fisheries and aquaculture insurance study that was conducted by FAO. Um, so basically, this study was every decade, FAO comes up with a review of the current state of world capture fisheries and aquaculture insurance. The last one was done separately way back in 2006 for aquaculture insurance, and then in 2009 for the capture fisheries insurance. And in 2022, the study that was published, that was then and for the entire decade from 2011 to 21, and it was a combined document that was published by the FAO. So through this review, what FAO intends to do is to guide decision makers in the formulation and implementation of appropriate policies, legal and regulatory frameworks to increase access of insurance for these sectors, also promote within the insurance industry the implementation of best practices and sound schemes that meet the particular business characteristics of the fisheries industry. And finally, raising awareness amongst the stakeholders involved about the role of insurance in the development of the sector, and also provide insights on how to join efforts to increase access to insurance. So this study collected information region-wise, right from the Americas region to Africa, Asia, and the Oceania, on the products and services for the fisheries insurance sector. And it covered several perils covered, also the policies in force that includes worldwide fishing vessel insurance policies, equipment and gear insured, underwriting and risk management services, claim handling processes, as well as the underwriting experiences that are there. So the key study findings that I would just like to highlight quickly is the critical aspects and the conclusions of this capture fisheries insurance, also particularly in context of the small scale fisheries. So as you all can see, worldwide, the fishing fleet is about 4.5 million, uh, and of which about only 10% has been insured. And overall, the contribution of Asia stands at 61%, whereas followed by America, it is 18%. And in Europe, it's 14%. And Africa covers about 6%. Then coming to the motorized fishing vessels, the number is about 2.8 million, with about 15 to 17% of the vessels insured, while the non-motorized fishing vessels are approximately 2.7%, but the insurance coverage data is not available precisely. So further to this, about in terms of the industrial fishing vessels, as you can see, about 67,800 large-scale industrial fishing vessels are, and of which 90% are covered by the marine hull insurance. Whereas when it comes to the semi-industrial fishing vessels, about 430,000 are available, and only 50 to 60% of them are covered. While about 2.3 million small scale fishing vessels are there, which are less than 12 meters overall length, and 95% of them are uninsured. So coming to quickly the key recommendations this report has provided was I'm just suggesting, I mean, providing the key points, whereas it's much more in detail out there. But the key recommendations are specifically need for vessel registries should be mandatory. There needs to be a conducive and supportive policy and a regulatory environment that needs to be provided by the governments and the regulators. Also, safety regulations at sea need to be clearly be provided, particularly for the insurance fisheries fishing vessel insurance sector. Also, affordable premiums and subsidies are a key for the uptake of insurance. Clear crew contracts for the insurance cover was one of the major recommendations. Also, innovations and technology interventions for insurance delivery and claim settlement process is another key aspect. Public-private partnerships, as well as various distribution models, so that it goes to the last mile, right up to the fisher folk organizations, including cooperatives, federations. Uh, there, other than that, it's also about awareness and advocacy. While FAO has already developed certain guidelines have been developed way back in 2019 for how to increase access of small-scale fisheries to insurance services. So these were some of the key recommendations that was the outcome of this worldwide study conducted, and more than 30 countries were covered under the study across all the regions, and about 67 responses were received from various worldwide insurers and brokers as well as reinsurance companies that responded to this survey. So coming to the Caribbean region assessment for needs for fisheries insurance. So this again over here, while just to set the context and to provide the background about the fisheries information in the Caribbeans, approximately there are 33,000 commercial capture fisheries vessels in the CARICOM countries, of which less than 1,000 are currently insured commercial fishing vessels. And when it comes to about SSF or the small scale fishers in the CARICOM countries, there are about 116,000 as of at least that are registered or recorded. So of which, and the other information is about in the CARICOM, in the Caribbean countries, approximately 80 to 90 fatalities are reported annually from accidents related with fisheries or fishing related activities. The safety at sea, overexploited coastal resources, and the other climate change challenges are the other major issues in the Caribbean. As you are already aware, limited access to insurance services is again one of the assessed needs which was there. Also, capacity building of insurance service providers and fisherfolk organizations is a priority. So let us look at why there has been less uptake of insurance services. While this applies globally, also whenever we have tried to conduct studies across various regions, this has been one of the major reasons, particularly from the suppliers side or the insurers' interest in the provision of small scale producers is why it's generally low. And it's not very different from any other regions, what we found also in the Caribbean. So, of course, with limited knowledge of fishing operations amongst the insurers and the demand for insurance, limited knowledge of demand for insurance by fishers again. Also, there is the low profitability of fishing vessel insurance because of the high transaction costs, small premiums, and high monitoring costs, which is involved. And further to that, lack of insurance mandates for fishing vessels, again, is one of the constraints cited by the insurers. And of course, well-functioning fisherfolk cooperatives that can act as good distribution agents or insurance agents to support the insurers. Coming to the reasons as to why there is less interest from the demand side in uptake of insurance coverage is again relating to the low awareness of insurance benefits of insurance, lack of insurance providers active in the fishing communities, and currently available insurance premiums certainly are regarded too high. The income from fisheries varies because of the seasonality of fishing. So obviously the insurance premium payments sometimes are not flexible. Also the insurance policies and claim settlements, but I think that's gradually improving as we've heard also through the CRIF and other insurers who are willing to kind of do the quick claim settlement process within I think for 14 days. In some places it could be even faster. So just to provide a brief background on the studies that have been conducted in the Caribbean region, particularly, and the efforts to initiate the fisheries insurance that have been carried out. We've already, since morning, we've heard about the coast initiatives and the CRIFs. So it was way back in 2014 when FAO was involved along with the Western Central Atlantic Fisheries Commissions, which was there. And this was, as you all know, was already a World Bank funded project, which and implemented by FAO, where this study was carried out in 2015, 2016. And it was supported by the CRFM and the Caribbean Network of Fisherfolk Organizations. Um, so as you can see, the findings were shared by FAO with the fishers and the Caribbean states in 2017. And the coast parametric insurance had already become operational by then. Sorry. So the key findings of this study were that while each of the CARICOM countries has at least one local insurer offering marine insurance, about 97% of the fishing vessels and assets were still not insured. So this clearly shows a disconnect amongst the insurers and the marine policies that were being offered within the industry. The survey also, key findings were that 83% of the fishers expressed interest to purchase insurance coverage for their vessels if it would be affordable and suitable to their needs. And only 17% of the fishers had health insurance and 20% had life insurance. So coming to the insurance needs identified during the study were, as you can see, the main was the insurance coverage needed, particularly for the third party liability, and then the coverage of damage and loss of infrastructure. Insurance coverage for fishing crafts and gears includes damage and loss caused by natural calamities, coverage of medical expenses, both for the captain as well as the crew involved in the case of accidents or thefts. The other need that was identified was the study showed that on an average, fishers considered about 2.7% annually of the asset value of the insured as affordable. And the rates should depend obviously on the insurance policies, depending on the kind of or the type of vessels that qualify for the premiums, or depending on how is it a day trip, a short trip, vessel, or if it's a long trip vessel, or and also the anticipated risks, and of course the qualification and experience of the captains and the other factors. So further to this, another key finding that was or expressed during the survey was the premium payment should more be on the semi-annual or annual basis rather than a monthly premium payment, which is sometimes not really affordable for the fisheries fishers. Then coming to the group insurance schemes, which is usually common in the health insurance within the Caribbean region. So the similar schemes can be also considered, particularly for the members of the fisher folk organizations where group insurance schemes can be offered. And of course, I missed out on the point that all insurance policies should also have no claim bonuses. So most of it has been documented in the FAO circular, technical circular, which is the study findings are there for anybody to look into it. So further to this, what was the follow-up on the assessment and study recommendations? Clearly, as you can see over here, both the fisheries authorities and fisherfolk organizations recommended introducing third-party liability insurance for commercial fishing vessels, which is similar to the vehicle insurance or the car insurance, which is mandatory throughout the Caribbean region. So obviously, this would have promoted the safety and provide cover for the crew of the fishing vessels too, which is really required. Another thing is also the third-party liability insurance significantly reduces the vulnerability of the fishers and their families to shocks, and it also contributes to the sustainable fisheries livelihood. So coming to if this kind of third-party liability insurance is integrated within the fishing license or the fishing vessel registration processes, and it's made mandatory, it is likely to have more impact, and it can also be much cheaper in terms of for all the stakeholders for willing to take up this kind of insurance service. So the steps taken by FAO from 2019 onwards to for supporting fisheries insurance is, as you can see over here, it has been facilitated, of course, by the coast, which has evolved to a bigger size by now. And the second one, which is very critical, is a review of legislative frameworks in 5 Caribbean countries in terms of entry points for introducing fishing vessel or the third-party liability insurance mandatory coverage for the fishery sector. And FAO is also supported in the analysis of best practices for the regulations for fishing insurance, and it has supported to prepare a draft regulation, which is a regulatory amendment that supports the fishing vessels and third-party liability insurance applications. So a few what FAO promotes in terms of options on sorry. FAO promotes options to introduce mandatory third-party liability insurance in the Caribbean region. So as you can see over here, the third-party liability insurance, basically what does it cover? As I mentioned already, it's about the common coverages which are there are the personal injury and the death claims, or liability towards the crew or the observers, including the passengers and their luggages too. The loss and damage of cargo, collisions and wreck removal, which is mandatory, required by the law. Also, the pollution aspects caused by the vessels during its operations, the loss of property on the insured vessel, and of course, damage to fixed and floating objects and the towage. So these are the benefits of the third-party liability insurance in terms of coverage. And why do fishing vessel owners need third-party liability insurance coverage is, as you can see over here, when the collisions or fishing nets and property of others is there. So the damage of other vessels, jetties, or damage to others' fishing nets, or the claims related to accidents also can be covered. Another interesting part is the piracy, where the acts of piracy against the vessels is there, but clearly does not cover the ransom payment costs. Also, coming to the crew, observers, and passengers, particularly is important, and that is also covered. This also includes the medical costs related to the personal injury, as well as illness-related costs, disabilities, and repatriation of crew also is covered under the third party liability. So also coming to the pollution and environment aspects, which is gaining so much of importance. So any damage to the coral reefs or oil leakage cleanups also is covered under this. And finally, the towage and wreck removals. So claims for damage to a towed vessel and the lighting costs of a wreck, which are compulsory by the law. So this I just want to show that as the law for a car motor insurance has been in force since 1930, where every car on the road has to be insured by law. But when it comes to the fishing vessels, it is still not yet completely in place, and it is gradually kind of picking up. So that's what we wanted. I just wanted to show in the slide. Coming to how does, as already mentioned, how this kind of third-party liability insurance cover will work when a vessel is not insured. Obviously, any of the injuries or loss or damage to property will not be covered, and the fishing vessel owners clearly would neither have the money nor at the same time they'll be at the loss of their assets too. Whereas if the law is there to protect the whole fishing industry, the government, and if it's introduced obviously by the government, when the government introduces a compulsory third-party liability insurance, uh, it becomes mandatory for a fishing vessel owner to obtain a fishing license that wherein they have to prove that they have obtained a third-party liability insurance for the vessel. And clearly, this is a win-win situation both for the fishing vessel owner as well as the crew, as well as the other passengers, or the loss and damage, not the passengers, but particularly related to fisheries. It's more with the crew and the loss and damage to the vessel. So here are a few FAO recommendations that are provided that could be considered on how to increase third-party liability uh, coverage in the fisheries sector. So as already mentioned, that the legislation, reviewing of the existing legislations for the key for the entry points for compulsory insurance needs to be looked into, with the possibility of extending the existing compulsory insurance requirements for which are already in place for the merchant shippings within the respective countries. So similar kind of extension can be done to the fishing vessels. Then further to this, develop with the fishers, insurers, and the authorities the necessary regulations for compulsory third-party liability, particularly for the medium and large-scale vessels, and then gradually bring this also to the small-scale fishing vessels. The other thing, obviously, is the policies and management, where identification of subsidy premium options for smaller size vessels could be looked into, and requirement of proof of insurance for even issuance or renewal of a fishing license. If these kinds of policies and management policies are in place, uh, the day is not far when this kind of insurance can come into force quickly amongst all the Caribbean island nations, and of course world over also. So just to highlight this, that FAO supports in assisting countries to introduce mandatory insurance, and the first and in the Caribbean, it's the first country that is likely to be to get this third-party legislation approved is the Barbados, where the fishing vessel owners will have to provide third-party liability insurance, have to take up third-party liability insurance coverage. So this information was based on the May 2024, when the Chief Fisheries Officer of the Ministry of Environment and Natural Beautification, Green and Blue Economy, had shared that this can come into force very soon. So what this is just to highlight as to what are the various tools that FAO has to facilitate access to insurance. Few steps on capacity building of insurers in the Caribbean. And then lastly, I would just like to talk a little bit about the GEFI SSF network and our origin and the scope of work and how we support fisheries finance activities, right, for, both for banking as well as insurance. And so coming to the FAO tools, so currently, FAO is implementing a project for the Lloyd's Register Foundation, which has funded this project. So it is developing the guidelines for inspection and valuation, particularly for small-scale fishing vessels to facilitate insurance. And end of September, FAO is organizing planning this workshop with a small group of fishing vessel safety and fisheries insurance experts who will contribute towards developing these tools. And the outcome of this is going to be guidelines for seaworthiness and safety inspection of small-scale fishing vessels, guidelines for value assessment of small-scale fishing vessels, as well as general checklists for inspection of vessel hulls, machinery, and safety equipment on board for small-scale fishing vessels. So these tools could be very useful, particularly for the insurance industry stakeholders. Some of the suggestions for the next steps that has been provided is to organize capacity building and awareness raising workshops for policy and decision makers, as well as insurance service providers, fisherfolk organization leaders, and NGOs. As already mentioned before, reviews of legislation, strategies, and policies that support drafting of proposals for the amendments of regulations is another next step that is suggested. And lastly, the capacity building material development and dissemination, which is again a critical aspect. And in the morning, we heard some people raising this point that how is the involvement of the fisherfolk organizations in context of this? Are they even aware about the kinds of products or what kind of fishing vessel insurance or kinds of distribution networks are there? So this coming to the capacity building material development, the benefits and costs of third-party liability insurance for fishing vessels can be, this kind of material can be developed. Also incorporation of third-party insurance and requirements of fishing vessels, fishing licenses or vessel registrations, how it needs to be done. Also, the marketing and promotion of insurance services amongst the SSFs or the small scale fishers in collaboration with the fisher folk organizations, existing fisher folk organizations in the Caribbean, which are some of the countries are very active, uh, and of course amongst the insurers also. So we just wanted to kind of bring up as to who should lead the next steps and who are the stakeholders that need to kind of look into this. So obviously, it's a large pool of stakeholders here, right, from the marine insurance providers and the brokers, the fisherfolk organizations, one of the critical components in the Caribbean countries, including the CNFO, the fisheries authorities or the fisheries departments across all the countries of the Caribbean, maritime authorities. This includes the shipping authorities or the ports, port authority, as well as the coastal zone authorities that are involved with the maritime related activities. Coming to the financing authorities, certainly the insurance departments as well as the regulatory departments, the national level training and educational institutes, the development banks that are present in the Caribbean region, as well as their other resource partners. And when it comes to the IGOs, international government organizations, certainly FAO is there. We have just today morning, we got introduced to ILO also. And then we have the CRFM as well as IMO are some of the key stakeholders who could be involved in these to bring in these kinds of changes to support the fisheries insurance sector. So, coming briefly to what is our KEFI SSF network? It's always confusing, so I just wanted to put a few slides here to come up to kind of inform the larger audience here in the Caribbean island nations. So KEFI SSF is, as already said, it's an FAO-supported initiative, which was was endorsed basically way back in 2019 when there was an expert workshop organized by FAO and APRACA, that is the Asia Pacific Rural and Agricultural Credit Association. So they had come together to develop the guidelines for microfinance, credit, and insurance, particularly for small scale fisheries in Asia. But this implies also to other regions. The reason why it was conducted in Asia was because 85% of the small scale fishers come from this region, whereas another 9% come from the Africa region. But we had stakeholders from across the world who had attended this conference, this workshop, and contributed. And they also endorsed that this kind of KEFI SSF network should be established for all the rural finance stakeholders, particularly to facilitate the availability and access of finance and insurance for the SSF by strengthening the capacity, particularly of policymakers, service providers, and the fisherfolk organization. So we address both the demand, the supply side, as well as strengthening of the demand side organizations. So just quickly to inform you all what is the scope of our work. Obviously, when we started way back in 2020, and I remember we had a few Caribbean stakeholders also who had attended our consultations for the Latin America and Caribbean region and provided their inputs. So based on the stakeholder consultations across all the regions, we decided that what is it that KEFI can bring on board and bring value to this sector. So to begin with, we started with increasing global attention and awareness, and we should be thankful that the year 2022 was also the International Year for Artisanal Fisheries. So that also helped us leverage and bring bring to attention of the policymakers more about the small scale fisheries sector and its constraints related with the financial needs. Then we also support in the development and dissemination of training materials. We also provide advisory and support services to concerned stakeholders and promote partnerships and joint initiatives. And lastly, of course, resource mobilization. So the reason being that obviously because small scale fisheries and the sector in general has a unique business characteristics, and the value chains that in which the fishers operate and the risks that they face are not well understood sometimes by the financial industry. So this kind of network, or creating all this kind of material, as well as bringing to attention or various policy briefs that can be developed. So this helps the particularly financial service industry, and certainly adapting the institutions to address the sectoral challenges, which is another important thing, that the value that we can bring. Also, learning from the regional experiences, not just about success stories, but also about the challenges. And this, what we mean is we have been conducting a lot of, we have our knowledge sharing platform where we bring in stakeholders from the various organizations. Some of them have also become our member organizations. So we share the best practices amongst various organizations across regions, of course. And you can also have a look. We have under our KEFI SSF webinar talk series, that we do. We do almost 3 to 4 and sometimes even 5 webinars per year based on the demands and the needs from our member organizations also. And finally, also to obtain support from other network members in how to implement financial service programs in support of small scale fisheries. So this is by and large the scope of work that we have. We also, as you can see over here, we support the fisheries insurance project cycle by addressing all the 5 Ps of the project, right from the situation analysis that we conduct. We also help in designing, also in preparations of awareness materials or training materials, particularly. Then we also implement certain projects for our partner organizations or support them as and when required. And of course, the evaluation where we have documented several good practices. We've also supported organizations in developing report. At the same time, if there have been initiatives to understand how is the fishery, how is the insurance sector, what needs to be done in the Asia sector. So that was a time when we also connected our friends from CC CRIF and the Coast Initiative to share their experiences with the Asia region. So coming to some of the other things, as I was mentioning, we are our main regional partners, or our founding partner is certainly APRACA, which is Asia Pacific Rural and Agriculture Credit Association, which is a consortium of about over 100 financial institutions in that region. And we are also joined by Africa, which is African Rural and Credit, Agriculture and Rural Credit Association. They too have more than 150 organizations spread over sub-Saharan region. So that is how we try to reach out to maximum members or organizations, as well as there are individual organizations that have been joining us. Of course, our membership is free. So here are some of the organizations that have been listed, and there are many more. There are also, the interesting part is we are also engaged in discussion with Swiss Re, particularly Asia Swiss Re, which has been piloting several initiatives, particularly in the fisheries and aquaculture insurance. So based on recent discussions, they are also kind of providing our information material for their underwriters to understand the fisheries sector because there's a lack of expertise amongst the underwriters, particularly related with fisheries. So this is the kind of value that we are bringing amongst the insurance or the financial sector industry. Some of the other things that we also do is we also have an MOU with one of the training institutions, which is a National Cooperative Development Corporation. It's called NCDC, and they are also connected well to the.
Ms. Soper,
Yes.
in the interest of time, my apologies, but we are constrained for time, so I
Yes.
would have to ask you to wrap up in the next
Right.
3 minutes, please. I
Yeah,
apologize.
almost the last slide. Yeah. So the overall objective is also training of trainers program we conduct. And here is something that I wanted to show you all was we have also supported small island developing nations in Central Africa, a country called Sao Tome, where we are supporting them in inclusive finance activities, right from training and capacity building amongst all the stakeholders to bridge how to bring a small scale particularly inclusive finance and I would say formal finance to the small artisanal and small scale fishers. So these are some of the key things that we have done. And here are some of our publications that are there, which are all available on our CAFE SSF LinkedIn page also. And yeah, so with this, I would like to wrap up. Thank you for your time and for the patient listening.
Thank you very much. In the interest of time, I'm going to open the floor for three questions. I will not go more than three questions. So the floor is open. I did have a question. So let me, I like to address this question to Mr. Tadasi. He mentioned that humanitarian partners did take up some of the insurance products. Could you indicate what are who are the humanitarian partners, and also did they collaborate if there was a payout with the government in terms of identifying who to support, or did they make the decision on their own? Thank you.
Shall I come in?
Go ahead, sir. I can hear you.
Yeah, thank you so much. Yes, as I indicated, we have what we call it a replica program, whereby we encourage humanitarian partners to also take an insurance policy. So far, I think that the leading humanitarian partner that's taking an insurance policy is World Food Program. We also have Start Network, and recently UNHCR has also taken a policy replicating the government policy in various countries in Africa. So yeah, as you rightly indicated, so it's expected that these humanitarian actors align their implementation plan with the government implementation plan, so that at times of payout, or if payout triggers, so the activities that they implement, and also the areas that they target is in alignment to avoid potential double dipping and other issues. So the first requirement is like when these humanitarian actors or partners are taking an insurance policy, they are also required to develop their contingency plan or operational plan, and this contingency plan and operational plan needs to be perfectly aligned with the government contingency plan, so that when there is a payout, again they sit down and they do what's known as the final implementation plan, agreeing like what kind of intervention to be implemented and which parts of the country to be managed or handled by the government, and which part of the country to be handled by the humanitarian actors is also agreed between the government and the humanitarian actors participating in the insurance pool. Yeah, I hope that answers your questions.
Yes, it does. Thank you very much.
Thank you.
Any other questions? Well, I do have another question, and it is directed to Ms. Oper. In one of your slides, you indicated that only 95% of small-scale fishers and the fishing boats were uninsured. The question I want to ask is, are there any interventions that your agency feels that would seek to address this issue, or any initiatives that are being developed for that?
So one of the there are some examples where small scale fishers have been insured, and at least based on our area of work that we've been doing across the regions. So we have found right from countries like Philippines, or even country like Japan, or even India and Indonesia, which are there. So each country has a different way to kind of ensure it. While Japan has a very robust cooperative model where each individual fisher has to become a member of their respective village organization, and they are all connected to the district federations, and there is certainly the disaster policies of the Japanese government are equally also good when it comes to the ensuring the fisheries, particular small scale fisheries. Recently, also in Indonesia, in 2016, there was protection, empowerment, and protection of all the fishers, fish farmers, as well as individual fish value chain workers. So they are that is where the government, there's a public-private partnership which is involved, and all these small-scale producers are covered under that policy because the government provides certain amount of majority of the subsidy component, whereas a very minuscule component has to be paid by the fishers. So there are various kinds of initiatives which are there to bring in insurance coverage for these kinds of activities. The key is obviously for these small producers is because they either it has to be from the government's side, that's the initiative that needs to begin to roll out this, or at the same time the fisherfolk organizations also need to be more organized, as we've already mentioned, and that is also one of the success factors in certain areas that we have seen. Yeah, I hope this answers your question.
So it does. Thank you very much. I have the time for one last question. Is there any? Yes, Mr. Hines, go ahead.
You. I may have to project. You come in. Thanks very much for the presentation. My question and comment picks up from Lynch's comment that spoke about the uptake of insurance for fisher folk, particularly smaller fishers and so on. And I did a calculation which looks at, based on what you presented, Ms. Supari, you're looking at less than 3% of the fisher folk actually purchasing insurance. And one of the things and again, coming out of the examples of Beryl and the discussions around insurance for fishers and the cost of insurance and so on, and speaking to, I think in your opening slide, you spoke about fishing being a dangerous occupation, right? And the word on the ground, at least from the fishing perspective, is that they don't really see themselves as being engaged in a dangerous occupation. So it seems to be a perception among insurers. I mean, we are terrestrial beings and we have perhaps irrational fears of the seas because it is an unknown domain and so on for most of us. But persons that navigate the seas daily would tell you that there is far more risk of them not catching fish and returning safely than not returning safely. Further to that, so my question is, are we at the right price point for valuing insurance for fishing boats? Again, coming out of the discussion, they would talk about the amount of vehicle accidents that these same fishermen would have gotten in without even incurring one accident at the sea, right? You spoke about 80 to 90 fatalities attributed to the fishing and so on. I just do a check here. We have over 400 road fatalities in Jamaica alone. And when we look at the numbers throughout the Caribbean, you see this exasperated in terms of the risk necessarily associated with driving on the roads versus what you're presenting as fishermen in the sea. So the question is whether we are in the ballpark as far as providing the coverage, the premiums to attract fishermen to buy insurance, particularly for the vessels. Thanks.
Thank you very much, sir.
So to answer your question, in the first place, if you notice, this was the FAO study that was presented, which was conducted way back. So I had reported based on that. I did not kind of talk about the recent ones. I was just trying to take you all to the what were the case study findings based on the survey that was done way back, and what is the way ahead on those aspects. So uh, forgive me, I mean, if that data I understand is much more higher, but the 100,000 accidents, which is very recent study that was done by the uh, Fish Safety Foundation, and that's a published report also. So these are some of the registered or the reported cases that are coming which are known. But we know that there are much more out there which go unreported for sure. So that's one aspect. And coming to, as you pointed out, that in terms of when we are saying that for the fishers, yes, for them coming back after a fishing trip with very less catch is certainly not such a good thing. Whereas, the kind of hazardous activities they are engaged in does not really, because it's a daily routine for them. But the fact that they have these multiple challenges that they are facing. So at least having an insurance cover with for them is beneficial. At the same time, when it comes to an affordable insurance, the uptake is low because one is awareness is too less. At the same time, the kind of affordability or the premium cost which is there is usually high because a lot of organizations, or they're not, as they say, it may, I don't know about as much about the Caribbean context, but certainly a lot of fisher folk organizations are not well organized. And that's also one of the big challenges, particularly for the insurers, to kind of give them a low premium pricing. At the same time, there are examples where we have seen that the premium pricing has reduced for the fishers because these fisher cooperatives have trained their own people as to how to do the value assessment of any of the accidents or any damage that has been caused to the vessel. So that's where the transaction cost, which is involved for an insurer to engage a surveyor to look at the loss and damage, is reduced. So automatically the cost, premium cost, reduces, and the end beneficiaries are benefited with. So that's where it is.
Thank you very much. Let me ask Mrs. Emmanuel to ask a question.
Right, I just wanted to add some stuff, just some information to the table, and this is related to some assessments we had prior to the introduction of coast in the region. And one of the things that we learned from that assessment, which looked at fishers in Grenada, it looked at fishers in, not Grenada, looked at fisher folk, yes, in Grenada, St. Lucia, and Jamaica. And one of the things we learned was that there is a demand for fisheries insurance among fishers. That's the first thing. They want insurance because they like the idea of insurance for livelihood. They do not like the idea of, or they do not necessarily like, but they are less agreeable with the idea of life insurance. As a fisherman said in Jamaica, and I will never forget him, he said, Miss Emmanuel, when I dead, I dead. I do business with life insurance. I love the word livelihood protection. So, sometimes it goes back to what we are selling fisher folk and how we are engaging them. In meeting with cooperatives in St. Lucia, for example, the cooperatives were very skeptical of the government being properly able to manage coast, meaning that they said, boy, yeah, we like what they're doing with the sovereign products that CRIF has and how they're utilizing the payouts, but we want to ensure that we access those payouts quickly. And we would be interested in purchasing coverage for our members. So that is cooperatives. So cooperatives saying that they want the government to say to them, here is an invoice that you need to pay to CRIF, because for them, that was their coverage. So just to say that sometimes we need to look at, it's important for us to also look at other innovative things. Fish sanctuary operators, for example, fish sanctuary operators in several countries like Jamaica, for example, where there are several fish sanctuaries, want to purchase insurance products because it's a way of supporting the fishers that they work with. So there is a demand, but we have to look at the type of insurance that is being demanded, maybe something we want to look at. And also, when we talk about capacity building, I want us to remember, I think somebody mentioned it this morning with respect to vendors and higglers, where the role of women in agriculture is very important, not just here in countries like Africa and so on, in the Caribbean, in several countries, they tend to be, for want of a better phrase, decision makers. If you influence the woman or you educate the woman, they then help to educate the farmers or the fishers in terms of the size of fish that you ought to catch or why insurance may be important. And I think this is a group that we need to work with a lot more, especially, you know, like in the OECS countries, for example, where a lot of women manage the fishing cooperatives, the fish markets, etc. So just wanted to add that additional perspective. Thank you.
Yeah, I'm glad you raised those issues because I was kind of hesitant to comment after this presentation. One of the big challenges that we face at the OECS, especially in dealing with multilateral partners, is the issue of context and the lack of a sociological understanding of the phenomena that they're addressing. So what you find happening, I mean, when I listen carefully to this presentation, the recommendations being made speak to a very statist approach to solving the problem. So you're talking about licensing of fishers, you're talking about setting certain rules in place where they must have certain, they must meet certain standards and everything. Now, I don't know for what sort of distinctions were made, but certainly for the OECS, our fishermen are largely sole traders, single operators with limited capacity. Can you imagine our governments now requiring that they register, they get licensed, they must have insurance? I mean, these things are very ponderous requirements. And I think at the heart of that is a sensitivity to the sectors that you're dealing with and a lack of voice. How you give voice to those sectors so that they can express their needs, so you really understand their condition, and therefore public policy has to shape itself to that, because if you want to improve their condition, you cannot impose the improvement. It has to start with their active engagement in their own self-upliftment.
Thank you very much, and we'll bring this session to an end. Let me quickly invite the two next presenters, which is Mr. Roberto Sandoval and Mr. Andre Stopper up. I will not read out their bios. I think you'll have the opportunity to do so. It's there. We're just trying to move on quickly. And let me first introduce Mr. Roberto Sandoval, who is a risk management specialist with the FAO Sub-Regional Office in Barbados.
Yes, good afternoon. Thanks again to the organizers for giving FAO the opportunity to present in this seminar. So this is a two-part presentation with me and my colleague Andres Topa. So we'll try our best to present as quickly as possible. So the first part is essentially to provide an overview of the work of FAO on disaster risk management. So the way that we view disaster risk management for agriculture is that it's divided into several phases. So you have prevention, mitigation, preparedness, response, recovery, and transition. So I think this is something that we all know quite well. And then there are key components or processes of disaster risk management that are globally accepted. And to us, these are 14 components, and this basically define or cover the range of activities across disaster risk management. So this includes multi-hazard risk and vulnerability assessment, legal institutional arrangements for DRM, planning and monitoring, disaster management information, land use planning, hazard-proof technologies, preparedness, multi-hazard early warning systems, immediate response and relief, assessing damage and loss and planning recovery, infrastructure rehabilitation, livelihoods recovery, risk transfers, which broadly includes insurance, and scaling up community-based disaster risk management. So our work in disaster risk management, the support that we provide to countries are essentially classified according to these 4 different activities. Okay, and so in terms of like the key components and processes that I just mentioned, multi-hazard risk and vulnerability assessment, disaster management information systems, assessing damage and loss, and risk transfers are the 4 components that we consider most relevant to agriculture insurance. We've heard this morning the importance about data, information, the importance of understanding vulnerabilities and risks. So we believe that by being able to support the strengthening of capacities and institutionalization of certain tools and technologies along these different components, and then this could ultimately uh, uh, prepare the systems or the sector for additional work on agriculture insurance. So just very quickly, some examples. So this is an example from St. Vincent and the Grenadines as part of a process mapping of agriculture sector data and management information that we supported the Ministry of Agriculture with. I mean, there are 2 things that we see when it comes to dealing with data-related challenges. One is how do you store and manage the data? How do you make it more accessible? How do you make it interoperable? The second one is how do you collect data from the ground? How do you collect it in a way that it's more systematic, it's in line with international best practice, and you could actually store and manage it properly, and you can disseminate and utilize it through various means. Okay, so this is an example. St. Vincent and the Grenadines, they have recently completed, or they're in the process of updating their agriculture management information system. So this one not meant really to be read, but really just to show the amount of work that has gone in terms of like reviewing how data should be stored and how it should be linked to different types of data within the sector. Okay, and we have another example from Dominica. This is the draft agriculture geoinformatics system design that was completed 4th quarter of last year. So this also involved a detailed mapping and inventory of the data sets as they are being collected by the Ministry of Agriculture and how this could then be stored and managed in a future system. And then when it comes to trying to find ways on how we could innovatively better collect information, okay, how to better and more systematically collect and analyze information. So just some quick slides in terms of like how we have been supporting the different countries in institutionalizing, building capacities, institutionalizing the use of drone technology, drone mapping, together with satellite imagery, and most importantly, how these are being integrated with information from the field, from the communities, from the farmers, from the fishers. So this is a South Coast Marine Conservation Area map of St. Vincent and the Grenadines. It's 462 hectares mapped in just one day. So just to show that, yes, there is now the technology that if you have to eventually have to do rapid assessments, assuming that you're able to get through challenges when it comes to access, you could actually map a considerable area. Okay. A similar concept, but on an inland farm for St. Vincent and the Grenadines as well. And then this is an example from Dominica where they're piloting a system where an extensive set of drone maps are being overlaid with farmer level information. Okay, so those dots are the locations of the farmers, and that map over there is a drone map. This ongoing work, if you zoom in, you see the drone map, you see all the information of the farmer, for example, that you have clicked. Of course, this is anonymized, but it could certainly be valuable when it comes to damage validation or loss adjustment should a micro insurance product be put in place in the future. Okay? And lastly, we have also been doing some work in terms of like supporting disaster impacts analysis. So this is an example from Grenada, Hurricane Beryl, a few maps that we are currently working on. So you'll see here on July 28th, on the left one, this is the pre-disaster satellite imagery for northeastern Grenada. On the right one, you see 10th July, which is basically 10 days after the passage of Hurricane Beryl. It may not be that clear, but there is a significant difference when it comes to vegetation cover. And we were able also to carry out additional analysis with other types of or other layers of information to be able to validate the findings. And this one, the last map here on the rightmost side is basically your typical red, green, blue map. And then on the right is what you call a false color or a color infrared image. It's a simple way to show or to try to analyze differences if changes in vegetation health and vegetation cover following a disturbance. And we see that at least for this quadrant or segment of northeastern Grenada, that the vegetation loss is actually quite consistent with what the government is saying, about 85% damage, because this is objective data using multispectral analysis, and we see that, yes, it is consistent. Okay, so before I pass on to my colleague Andrea, so in addition to those work that we have been supporting the different countries in, we have also been working on agriculture insurance in the Caribbean. This started in 2018 to 2019, where as part of one of our sub-regional projects, we supported the situational analysis for Jamaica, Grenada, and St. Vincent and the Grenadines to try to understand what are needed to create an enabling environment for agri-insurance provision. And then from 2019 to 2000, onwards, we then proceeded with supporting the government of Grenada in the development of an insurance product for nutmeg and cocoa. So now I hand over to my colleague Andrea. Thank you.
Thanks, Roberto. So thanks, Roberto, and well done to you all. I have lights in my eyes, but you seem to be awake still, which is, commendable. The challenge is you will get asleep during my presentation, unfortunately, but I'll try to be less boring as possible. So, essentially, Roberto left us indicating that the sub-regional office of FAO has been active in researching and developing insurance programs in the Caribbean. And we wanted to provide some feedback to you on the activities that we've been carrying out. So may I start with a brief terminology digression first. Now, the challenge of this seminar is that there are so many topics to discuss, and so the ordering we needed to account for people being virtually presenting. It's 1 p.m. in India at the moment, so Suchitra did a very good job in staying up. So the order of these presentation is not ideal, but I would like to take us back just very rapidly to a few terms that we have been discussing today. But you know, we have a lot of experts here, but we also have policymakers that may be less familiar. And it may seem trivial at the beginning, but we have an objective here. Okay, so first of all, we've been talking a lot about index insurance, parametric, okay? Let's clarify the distinction between index and indemnity. It's too late. I would like to test the audience, but it's too late. I understand. I will not go there. So the essential difference is that in indemnity insurance, we need to visit, is it the farm, the livestock operation, and assess the damage. Index insurance, as we heard various times this morning, is based on indices that mimic the loss. So we understand that index insurance is attached with basis risk. As David was saying this morning, David from CRIF, basis risk is there, and it is there to stay. And basis risk, in very simple terms, is the difference between what I am paying out and what I should have paid out or not paid out, right? So this is an important distinction. So also, there is another element, and this has come out very clearly today. Index insurance needs specific design and testing activity. Indemnity insurance is there. It's an off-the-shelf, basically. You just need a lot of lead work. So this is the key difference. Now, let's look at, not working? Okay. So this again, we've been, you know, very clear on what a premium and an indemnity, a payout is. However, you know, just a quick reference to the fact that we tend to use indemnity for indemnity insurance and payouts for index insurance. This sometimes legally may be relevant. Now, so I wanted to run a quick, again, you know, we don't have time to run tests here, but I wanted to provide some intuition on what do we mean by saying that insurance is expensive. Okay, first of all, what is the metric to say that insurance is expensive, and how expensive is expensive, right? So this is important for the evaluation of our programs. So for example, I personally live in Rome, in Italy, and I would pay, better define the premium rate. So when we want to say how expensive is a policy, we talk about a premium rate. And we say, okay, let's divide the premium amount in, you know, in dollars or in whatever currency by the value we are insuring. So if I'm paying $3 over $100 value of something, my premium rate is 3%. So now my vehicle theft coverage is 0.2% or 2 per thousand, right? Is that expensive? Is it cheap? Let's see. Life risk coverage, if I'm a farmer, I want to go to a bank and ask a loan, they will charge, you know, very high interest rate, depending on the country. It could be, you know, 9%, 10%, 12, 15%. And they're going to add a life risk coverage that would cost 0.5%. Now, hurricane coverage, let's come closer to something we can relate to. Hurricane coverage for crop trees in Grenada. This is factual, it's not made up. And the rates, there are two different products we will discuss later, are between 4.3 and 6.3%. Okay? So an average rate across all agricultural policies in Spain, we have experts here already from Spain, and tomorrow we'll hear about the, roughly, this is very rough, but on average, it's around 5%, okay? Now, we've been talking about, tomorrow we'll also have a live presentation on the livelihood protection policy, and in Jamaica, it was selling at 13%. Now, a last example, drought coverage for cereals in Morocco in 2024, 62.3%. So we are moving a crazy range from 0.2% to 62%. And this is helping us just to understand a bit what is expensive. If I have a premium rate of 25%, I will be every 4 years, the sum I'm providing, I'm paying to the insurer will compensate 1 year of entire loss. So this is a bit the order of magnitude we could consider. Now, drought coverage for cereals in Morocco, 62.3%. Is this insurance? No, it's no longer insurance. It's dollar swapping. And in fact, with some colleagues that are here as well, we are assisting the government to think about changing both the risk transfer process and the structural process. Obviously, it's too risky what they're doing, and it doesn't make sense. So we'll see that some of these programs can be turned into direct transfers, which would be more efficient. I don't want to bore you with the transaction costs of insurance, but on top of the pure risk loss, which would be the actual damage, there are transaction costs that need to be considered. If the amount is very high, the transaction cost obviously are also proportionally very high. Now, we did discuss today, and I think this is clear for all, that we have 3 different levels of application. This relates more to index insurance. Indemnity is usually for micro level insurance. Here the key is, I've heard about micro level insurance being small insurance contracts. I would slightly disagree. We defined micro level insurance as contracts that have policyholders like farmers, households, small businesses. So in our jargon, this is what micro level insurance means. In fact, we don't call it micro insurance, we call it micro level. Meso, as we discussed earlier, cooperatives, aggregators in general. Now, banks, it's very interesting. If we had more time, we could discuss why we don't see a lot of, theory would say that banks would buy a lot of meso insurance for their exposure. This doesn't happen. It would be very interesting, but, I want to be lenient on you. So macro, we had a fantastic presentation this morning about CRIF, and we see, we know everything about macro insurance, and ARC as well. ARC is just something that has been replicated for Africa. So we are comfortable with this. A few notions here. Macro insurance, I am dealing with 1, 2, 3 clients at a time, right? And this is fantastic from a retail point of view. Micro, the problem is exactly the opposite. I need to work with a multitude of farmers, and in some cases they can be millions, right? So this is a fundamental difference. I'm not saying we should do only macro or should do only micro, but it's good to have an idea of what we are after. Okay, so David kindly explained the cat in a box term, which is useful to know because it relates to what we will be discussing about Grenada. So essentially, it's interesting, many of you will have heard about the quantum physicist Schrödinger that developed a theory for putting a cat in a box with poison and if he was alive or not. So being the role of the observer critical in quantum physics. So I think that the people that mutuated the term had a sense of humor because cat in a box is not a really good term to understand what we're talking about here. Anyway, it's a catastrophic event, as David said, occurring within the boundaries of a predefined geographical area, okay, which is called a box. Usually they call it also a circle, it could be a polygon, whatever. And so here is your cat in the box. Oh, sorry. This is a cat in a box. So, good explanation, by the way. You know, if somebody is curious, Swiss Re has a very, very good, very simple terms explanation on this. Okay, so now, unfortunately, with Roberto, Dr. Clark, we decided to take you back for, a few minutes on the real challenges of agriculture insurance. And this is not because we want to be punishing you at this time of the evening, but because we think that getting practical is very important in understanding what are really the challenges for developing agriculture insurance. I guess that, if I understand correctly, this initiative wants to lead to a set of plans, programs to be developed. So acknowledging the challenges is tremendously important. And we also, since we don't want to only provide, show the difficulties, we want to also mention a few ways in which these challenges can be addressed. Okay, so I'll try to be brief. And we all know that reaching out to farmers is very difficult, right? So why an insurer, let me go to the supply side, why an insurer that has a lot of commercial and business opportunities in closer areas with people that can be reached in an easier way should invest in doing the legwork. That this is obviously discouraging the insurers. Also, there are technical issues. Let's say we have all very willing insurance, very well disposed. There are challenges in the sense that in the Caribbean, we know the structure of agriculture is small-scale, multi-cropping structure. So think of horticulture. You had cabbage, then tomatoes, then you'd have, whatever, spinach, whatever. And so you would have, 4 or 5 crops in the same year, and the insurer would need to, visit the farm at planting, at harvesting, making sure that things are proceeding. So this makes it quite complicated. And as you already understand, potentially this is where index insurance comes in. Okay, delivery mechanism. We'll see how important it is to be able to deliver insurance to farmers. And also, I think that God, when God made the Caribbean, he thought, no, this is too good, to be true. Let's, provide a bit of, risk in addition, because otherwise it would have been just paradise, right? So the catastrophic and systemic risk of, the area is indeed formidable. And we've been hearing this already today. Quality and quantity of data, we don't need to go through this, we know. We do need. However, on this side, it'll be interesting hearing tomorrow the experience of the Spanish program, because at some point I've been quite interested in the program in Spain, which I think is one of the best in the world. And around the 80s, the Spanish policymakers said, okay, we have a problem, we don't have data, but let's start. And now there are 40 years more of data in a fantastic database that allow you to, it would make any actuary, tremendously happy. Okay, so data is not there, but, the message is you need to start. Also, designing and administering agriculture insurance is different from, vehicle insurance. So, and it's probably more difficult. And this is another challenge. So, in terms of the farmers, demand is also low. Now, we know farmers, this is obviously common knowledge, cash constraints, their ability to afford. In red, we have very expensive, and now we know what a very expensive coverage is. You face situations in which you have to pay 15, 20% for insuring your crop, because the risk is just, extreme. Okay. Then there is something very interesting for the policy makers, and it's the reliance on ad hoc ex-post support programs. If a farmer knows that the government is there to help, why should he be spending money to buy insurance? This is, very logic. It doesn't take, a Nobel Prize. Laura to consider. Now, also, there is a bit lack of understanding and a lack of trust in insurance. And this is, for all of us, right? We don't tremendously love our, vehicle insurers, or we think, probably in the back of our mind, we think that they are, trying to take advantage. But also, lack of understanding means, for example, that farmers pay a premium, and at the end of the season, when everything went well, they want the premium back. So this is not how insurance works, and you need, obviously, to go through a cultural shift. Mind you, in the countries where insurance programs are mature, this has happened. And farmers, despite relatively maybe low, thank you very much. Lench is getting concerned for my health, thank you very much. Yeah. Or is it a way to stop me? Okay, so yeah, let's proceed. Okay, so how can we address these challenges? It is tremendously difficult. However, there are ways. Public sector, we don't have time to go into this. This would require an hour. But there are a lot of roles, and Professor Bardahi mentioned today, how, the public sector can support. And we have at the center, it's not, by chance, financial support that can be provided to all the different activities, but the finance is critical, right? So there is a generating enabling environment, financing, the risk financing through reinsurance or co-insurance pool. We'll hear about the Spanish experience tomorrow, data, outreach, whatever. But eventually, we all know in the business, this is a very elegant slide. We all know that a lot boils down to support for purchasing, which is a bad word now called premium subsidies, right? So how do you use this is, another discussion, but this is the reality. Now, governments can also, and this is a little more serious, governments can develop an institutional framework that can help to manage the various components of the system. This is just, one of the many examples this is taken from the paper Roberto was referring to in Jamaica. And you see that in red, we have the public sector, in green and blue, the private sector, in blue, the insurance, the insurance community, in green, the farmers, the end users. So there are many ways of coordinating, and we'll hear tomorrow also ways in which these components of the systems have been brought together. And this is critical in terms of generating a program. There is a mantra that is, used by people in the industry is, don't think only about products, but think about programs, which is, really something different, okay? So, final point, I would say that I have a few examples to show that where significant uptake levels have been achieved, there has been either a value proposition, incentivizing farmer value, adding value to the proposition, incentivizing farmer to buy insurance, or a conditional requirement, meaning, Mr. Farmer, you need to, if you want to have this advantage, you need to buy insurance, or Miss Farmer. Okay, for example, and there are many, but I'm just listing some of the more relevant. Greece operates a mutual insurance system with no subsidies, 0 subsidies. They all buy insurance. Why? Because the European Union provides through the Common Agricultural Policy a lot of funds, tremendously. In Europe, you can't do agriculture without the Common Agricultural Policy. So if you don't insure, you can't have access to these funds. So everybody, every farmer in Greece is insured. And they run an insurance system without subsidies. So it's interesting. United States and Spain, we'll see tomorrow, sorry for referring, farmers that do not enroll in the agricultural insurance scheme cannot apply for disaster relief. This is another way. Of course, in these countries, there is also significant premium subsidy support. India, if you want to access credit through a bank, automatically you get insurance. Now, lately, this has been the rule for 40 years. Now it's changing, but they got to up to 50 million farmers insured in this way. Finally, Zambia, overnight, they moved from 20,000 policies to over 900 policies by just linking to a subsidy scheme. If you want to have access to a subsidy scheme, please buy insurance, which was reasonably priced. Okay, now, this is what we are more fond of, and we would like, sorry for taking a little time, but we would like to talk about a case study from Grenada rapidly. We know that hurricane risk in Grenada is relatively infrequent, but when it happens, when it strikes, is deadly, right? And we've seen this with Ivan, we've seen this with Beryl, so there is no mystery about this. And the interesting element in Grenada is that nutmeg and cocoa are vital sectors for the economy, especially in particular for obviously the agriculture industry, but they do affect the entire economy, the producers, the processors, the marketing sectors, and the government, because again, the government is called upon to provide support. So and this is, also, I think, Dr. Jules, you were mentioning that we're backing Grenada in crop by 10 years and in fisheries 2 years. And this graph is just showing it, because nutmeg trees that are knocked down take 8 to 9 years to come back to bearing. So think about the scenario in Ivan time when, people were just in despair because the plant, the trees, the actual trees were all knocked down and farmers were just abandoning the land. Also the farmers tend to be middle-aged and above, and so they have challenges in finding other alternative activities. So can insurance be a sustainable approach to transfer risk and minimize the impact of a hurricane event? This is what we considered, we looked into. And where did we find hope? We found hope in the fact that the delivery mechanism and the premium collection could have been dealt with by the sector associations. In Grenada, the nutmeg and the cocoa associations are the statutory association that you can't sell to anybody else other than the association. So they have a role of aggregation, a formidable role of aggregating supply of the products. So they have direct and constant access to the farmers. So essentially, to make it short, we designed a product. And this connects well to the discussion we were having on the cat in a box, the basis risk. And we had a lot of thought, and I would like also to mention my colleague William Dick, who is in the audience here and did all this work with us. So we conceived a product that could address the various elements. So provide an initial payout based on a wind speed index in each area. We'll see that Grenada was divided in 15 different areas, and then and this would have the logic of providing fast cash injection, a bit like Liz was saying, compared to government, to get farmers quick money to do the clearing, the reestablish. I mean, not the reestablishment, but that would take time, but access their their farms and do the basic, and then when time comes, which could take even 2 or 3 months, do a physical assessment by area that could define and make it more accurate. Okay. So to minimize basis risk, we know Grenada is a beautiful island, with a mountain range in the middle. And so what happens on one side may not necessarily be what happens on the other side, and the same, what happens on the lowlands is not going to be the same as in the mountains. So together with the ministry, together with various experts in Grenada and the Met Service, we divided Grenada in 15 different areas. Okay. So now back to how expensive is expensive. These relatively rare events, but with a very, high impact, or the typical case for insurance. So something that happens rarely, but when it happens, it can be, devastating. And so, yeah. So what happened practically is that, to get to the micro level coverage, we would have needed to register farmers for location and number of trees so that they could be allocated to the various areas. This, I would, spare you the details, and we have Louise and Lauren here, that is from the Ministry of Agriculture. She knows everything about it. And so at a certain stage, we had obvious access to information that this year was going to be a very active season in terms of the Atlantic, in terms of hurricanes. So we said, okay, we're not getting there in terms of the registration. Why don't we switch to a macro approach for these initial seasons, right? A macro approach, as we said, is a bit easier. And so we said, okay, propose to the ministry to move to this approach. And we also suggested, look, it's going to be difficult to get all the farmers on board. That needs education, it needs, dissemination, whatever. So why don't you support at the beginning the premium? And the ministry was very open on this, also because obviously the minister knew that if something was going to happen, he would have been called upon. So now, remembering this, the difference between the macro level and the micro level is that with the macro level, it's much easier to go to the transaction. Then you have to, if a payout is triggered, you have to distribute the payout. And this is obviously, the challenging part, which Grenada, I believe, is. By the way, we're going to have Mr. Church from the ministry tomorrow presenting about this, so we can ask a few details more. Yeah. So eventually, the association decided to go for a simple, even easier approach, a more simple approach, the cat in a box we were discussing earlier. The nice thing is that 1st of July, Beryl passed, and they had this coverage, and they paid out, and they received a payout of $1.4 million, which is obviously, looking at the overall damage, is probably not a huge figure, but it's something that definitely would help the sector. Okay, this cat in a box is very simple, and the more hurricanes have 5 categories. If you buy protection only for a hurricane category 5, you'll pay less because it'll be triggered less times. If you go down to tropical storm, you'll pay much more. Okay, so the premium rate here is 6.3%, as we were saying. So it sounds, from what we were saying, relatively reasonable. Now, the premium rate for the other product, which was more focused on the various areas, was going to be 4.3%. The logic is that it is more accurate. So it's going to pay more specifically less universally. So this is why it was going to cost less. Okay. So I'm wrapping up, I promise. So ag insurance and the importance of being assessed. So together with our colleague Charles Stutley, that some of you in the room know, we have developed these 2 tables. One for indemnity insurance, and also tomorrow we have Damien Hinz that will share a presentation specifically on the experience, so I don't need to spend time now. Now, this is a table on indemnity, and then a table on index will follow. What do we see? That apart from the Dominican Republic, I don't know if anybody in the room has information on the AgroDosa program. We think it's still operational, but we'd be happy to know more. All the indemnity insurance programs have been terminated. They were basically experiences built by boards of commodities like, banana, coffee. Interesting, I'll say this later. A very interesting program was the wind crop program that was running very well, but failed because of the collapse of the EU export facilities to the. So essentially, experience with indemnity insurance is done apart from this unknown about the Dominican Republic. Now, moving to index, moving to index, we do see that there are operational programs at various levels, and there are been experiences that have been launched. The CORPEF product, the REAP initiative that Mr. Glean was referring to earlier. So there is interest in these new products, and we've obviously heard about CRIF and all the interesting work they're doing. Tomorrow we'll be discussing also the LPP. The LPP was not specifically for agriculture, but it's useful in terms of how the product has been structured and then monitored and evaluated. They published a 20 lessons learned document, which is very interesting for the case. So wrapping up this, I just want to say, let me go back to to the final slide. And I think that out of this conference, we all need to take back some homework. And in particular, we need to develop plans to accompany how these agriculture insurance programs will be assessed. Okay, there was a slide on the objectives. I don't want to go there, but insurance can be used in agriculture for different objectives. So first, identify clearly the objective, then analyze the risk, assess the actual feasibility. If it comes out that I'm requested to pay a 50% premium like in Morocco, obviously agriculture insurance is not the right tool. And then set clear and measurable indicators that can document the progress achieved or the lack of any progress. So understanding obviously, this would require an entire day about discussing indicators, but there are ways to define. The problem is, and this is for the entire audience, is that monitoring and evaluating insurance program in agriculture is particularly complex and expensive. So this would require a coordinated effort to make sure that the resources are used efficiently. So thank you very much. Sorry for being a bit late. Yeah.
Thank you very much, sir. We're going to change things around a little. We're going to have a quick 10-minute break, and we're going to return after the break to have the question and answer and a wrap-up session, which will be led by Ika. But in the meantime, during this 10-minute break, we'll also announce a group photo that we're going to take in the lobby. So if everyone could go congregate in the lobby for the photo, and then photo first, and then quick coffee break. And then we don't intend to spend, when we return, more than 20 minutes to get everything, to complete the day. Thank you very much, everyone.
Hello. Can I encourage everyone to quickly go across for the group photo? Um, thank you.
you. Good afternoon, everyone. I made a slight faux pas. We do have one more presentation, and let me invite Mr. Nicholas Granger from the World Food Program to make his presentation.
Good afternoon, colleagues. I know I'm standing in between the beach and bears, so I'll be extremely quick with my presentation. So I'll actually start by saying my name is Nick Granger. I'm a Program Policy Officer with the World Food Program Caribbean Multi-Country Office based here in Barbados. And today, what I will be doing is discussing mainly the work that we are doing on climate insurance, potential links to social protection and agriculture. So just to give some history in the World Food Program, we opened our office officially here in the Caribbean in 2018 in response to Hurricanes Maria and Irma in Dominica and Antigua and Barbuda specifically. Our main partner is SEDIMA, because we're an emergency response organization, and we work with SEDIMA to ensure that we can support governments in strengthening their systems, that they can better prepare for, adapt to, and respond to shocks. So this is just a timeline in terms of how we have engaged in the Caribbean over the years, from as early as 2015, Tropical Storm Erica, and where it was just consultants being flown in. We opened the office, as I mentioned, in 2018, and to date, we are in 8 countries, including Barbados. And we cover 22 countries in all in the English and Dutch-speaking Caribbean. Next slide. So I mentioned that we support governments in terms of emergency response. So we have been working very closely with SEDIMA governments for the countries which were impacted by Hurricane Beryl, especially on the logistics and supply chain side. But my work is more so on the program side, and more importantly, social protection. So we also work with governments in the Caribbean to ensure that their social protection systems could be more shock responsive, when they're exposed to hazards or perils. So we call that shock responsive social protection, which is not really a new terminology because governments of the Caribbean have been using social protection systems to respond to shocks from as early as 2004 with Hurricane Ivan to as recent as Hurricane Beryl in Grenada, Jamaica, and St. Vincent and the Grenadines. Next slide. So what is shock responsive social protection? As I mentioned, it's again strengthening the national social protection systems to ensure that they can be strengthened not only in times of normalcy, but also can be used in response to shocks. And what this slide speaks about is 6 pathways as it relates to social protection or the strengthening of it. You have the institutional side where you look at policy and legislation to see how not only it ensures it speaks to vulnerable populations, of which the agriculture and fishery sectors are a part, but more importantly, that language around climate change, the climate crisis, and disaster risk management are included. Information management systems, we work with governments again to make sure they have IMSs in place, that you could better access data around your vulnerable populations and those who are vulnerable to shocks, and to ensure that that data is accurate and up to date. We also work with governments in terms of targeting, understanding how we can identify those persons who are vulnerable, where they live, where they work, etc. Delivery mechanisms, we also support governments in terms of looking at different options for delivering assistance, and in particular, cash assistance to beneficiaries, whether it's cash in hand, whether it's direct debit to bank accounts, or most recently in countries like Belize, where we have been using mobile wallets for some of these pilots. Coordination, one of the main aspects is trying to bring the social protection ministries and disaster management ministries closer together. But also we recognize social protection is cross-cutting. And the more we engage with countries, we see how social protection and agriculture and fisheries also has a link. And last but not least is financing. How can we ensure that we have predictable finance in place to ensure that the most vulnerable are protected and considered in the time of a shock? Next slide. So we launched our disaster risk finance strategy in 2019, and it has 2 focuses. One is to work with governments to ensure that a risk-layered approach is taken, that the vulnerable populations are considered. So as was mentioned earlier, no one risk finance tool is seen as the silver bullet that can address all the risk, but how can we work with governments to understand the type of instruments which are available, such as the CRIF you would have heard earlier, and how they can be used depending on the different scale and impact of events. The other side of the risk financing strategy is action. How could we support governments in terms of actually piloting innovative mechanisms that can release funds quickly to vulnerable populations in the immediate aftermath of the shock? Next slide. So this is where we decided to implement our first pilot project. We started with the government of the Commonwealth of Dominica in 2021. So as I mentioned, we will be supporting the governments in terms of strengthening their social protection systems. So we work with them around information management systems, finance, targeting, and delivery mechanisms, but we wanted to see how we can link finance and in particular insurance to these social protection systems. So in 2021, we met with the government of the Commonwealth of Dominica, but also CRIF, to see how we can link CRIF payouts to vulnerable populations through the national social protection systems. So we at WFP will provide additional premium support to the government, which would increase the coverage under the policy. And should the policy trigger and the payout goes to the government, a portion of that payout is then ring-fenced to be used specifically to deliver cash assistance to impacted populations. So for example, if it's a case that as a result of WFP increasing the premium coverage, it allows for 10% of the overall payout to be used as cash assistance. Obviously, if there's a payout of $50 million to the government, then $5 million is then allocated to be used as cash assistance. And where this can link to the agricultural sector is that, again, we know after climate shocks in particular, how vulnerable the fisheries and agricultural sector is and farmers, and how they need assistance to allow for their livelihoods to get back on track. So again, once the policy triggers, the government could decide to identify farmers or fisherfolk as being the main beneficiaries to receive assistance under the payout for that percentage which has been allocated from the CRIF payout. And again, delivery of that cash assistance to that target group is done through the national social protection systems. And as you heard Mr. Tadasi from ARC speak earlier about distribution and implementation plan, we also have a similar plan in place, which captures, again, how funds go from CRIF to the government, but more importantly, how do funds flow from government to impacted populations in the event of a crisis. So it looks at, again, who you're targeting, how exactly you're targeting them, what are the delivery mechanisms to be used, and how you will monitor also that the assistance is reaching those that need it the most, but more importantly, that it's doing and achieving the results that it's intended to meet. Next slide. So while in the Caribbean, we started with Dominique in 2021. 2022, we had a program in Belize. And 2023, we have a program in St. Lucia. And as of 2024, with support from Global Affairs Canada and the Caribbean Development Bank, we now cover 7 countries in total, topping up both the tropical cyclone policy and the excess rainfall policy, where again, should the policy trigger, a percentage is allocated for cash assistance. And those additional countries are Antigua and Barbuda, St. Vincent and the Grenadines, Jamaica, and Grenada. But the approach was also replicated by WFP in Nicaragua, and they decided to do the model a bit different. So while we at WFP in the Caribbean use the percentage of the payout for cash assistance directly, they wanted to use it for in-kind support. So this is just a replica to a certain extent of the previous slide, but the only difference is once the payout occurs, while some of the funds, or rather in the case of the Caribbean, all the funds go to the government for them to implement the cash response, some of the funds, in this case for Nicaragua, would have gone to WFP for them to assist the government with different programs. So in terms of links to agriculture, they would have used their payout from the CRIF to make sure that they can provide food rations to take home for families, which is approximately about 114,000 people were fed as a result of the payout. It also allowed for the creation and improvement of school gardens, so fruit trees for farming families to improve food security for students in 600 affected rural and urban schools. And cash transfers were also delivered to persons who were in the rural sector and the agricultural sector as a result of their livelihoods being impacted by the storm. Next slide. So potential entry points in terms of social protection and agriculture. Why would you want to also make the link between the two? One, targeting vulnerable populations. Social protection programs have a very keen focus on the most vulnerable, which in most cases includes smallholder farmers, the elderly, and also women in agriculture, and also to ensure that the rural benefits can reach everyone and you can see adequate development. Social cohesion and stability, reducing poverty and inequality via social protection, and it can create a more favorable environment for agricultural development and investment. Next slide. Building insurance with social protection. Again, governments and organizations can design programs to build in agricultural insurance as part of the scheme. So for example, if you're doing cash assistance, you could also ensure that a portion of the cash assistance can then be used for insurance premium that farmers and fisherfolk can purchase insurance coverage. Targeted subsidies and premium support. Social protection programs can provide that targeted subsidies, as I mentioned. In the case of what we're doing, we're providing premium support for vulnerable populations, but it can make agricultural insurance more affordable as well for low-income farmers. So this obviously ensures that the most vulnerable farmers and fisherfolk also can benefit from having access to insurance. Next slide. And this is just an example of some of the programs that we have across the globe, or mainly Latin America and the Caribbean. Again, ARC would have mentioned in Africa, we partner with them on some projects, but as it relates to the macroinsurance payouts from CRIF being related to the vulnerable populations, again, these are the 7 countries which we have embarked on. And we also have microinsurance and macroinsurance programs in parts of Latin America as well. Next slide. So in closing, the CRIF top-up model being implemented in 7 countries at the moment. And as I would mention at the bottom, it's not seen as a replacement for any agriculture insurance tool, but again, to be seen as something that could complement. As I mentioned, there are limited insurance products which are catered to farmers and fisherfolk, but we're trying to ensure that their livelihoods can be protected or considered in the immediate aftermath of the event. Our risk finance strategy, as I mentioned, is people-centered. So even in terms of the government choose to target fisherfolk and farmers as being beneficiaries of the cash payout, we also try to ensure it's those farmers and fisherfolk who don't have access to insurance and don't have adequate financial protection in place. Social protection systems can be used to ensure smallholder farmers are better targeted, as I mentioned earlier, and implementation can vary depending on the country. So that goes back to the point of understanding where the key vulnerabilities are in which sector and how governments wish to use these instruments accordingly. And last but not least, as long as governments continue to strengthen their national social protection systems, WFP will advocate to raise funds to see how we can continue providing premium support for this top-up model. And again, what you will hear probably in the coming days, in particular in Grenada, as a result of Hurricane Beryl, the policies for CRIF have triggered in all three countries, and as a result, a percentage of those payouts have been allocated for cash assistance to vulnerable populations. And there should be a press conference in the coming days of the government of Grenada identifying not only the value of the payout, but more importantly, how the payout will be used, again, to impact those persons whose livelihoods were impacted by Hurricane Beryl. I'm sorry to rush through it, but thank you very much. And any questions? I don't know, you all probably are ready to leave.
Thank you very much, Mr. Granger. So let me open the floor for questions. You can also direct the questions to the two previous presenters also, which is Mr. Stopper and Mr. Granger and Mr. Stopper, please. I do have a question. Sorry. I noticed, and it came up in the last presentation from Ms. Upe, where the development agencies actually partner with agencies to actually top up. And I noticed you did that. And the question I wanted to ask, what was the process you used to identify the cash payment, to identify the needy? Would that have been done before the event, or would it have been post the event?
So it varies as well, depending on the country. So for example, with Grenada, it's a new model in place. So we're actually targeting new beneficiaries who either are not already receiving assistance through the regular public assistance program, or beneficiaries who are not receiving assistance from other programs as well too. So in the case of Grenada, it will be an entirely new program where we have to actually target new beneficiaries for those who will then be receiving assistance from the CRIF funds. For a country like Belize, for example, they have an idea to a certain extent of who are the persons that they want to target. And again, depending on the transfer value that they will identify, they will then see how they can also onboard other populations who are impacted, because it's also recognizing that, yes, although those already on the public assistance programs are vulnerable, but hurricanes and shocks can easily move persons who are above the poverty line to the below. So there's also the option to pre-identify, but also to onboard persons because of the flexible nature of the social protection systems to be added to these programs as well.
Thank you very much. And a conversation that I had with Mr. Stopper, where he indicated in his presentation that you were not referring to the crop, but the asset, and that with respect to Grenada and with nutmeg and cocoa, the project. So I just wanted to take the opportunity to point that out. Any questions? If not, let me invite Ika to do the wrap up. I must also indicate, thank you very much, sir. And I'd like to thank the two presenters, Mr. Granger and Mr. Stopper, for their presentations. Excuse me. Who's making it? All right, no problem. So, okay, no problem. So you could go ahead. And must also indicate that we have a hard stop at 5:30.
Yes, good afternoon, colleagues. My name is Michael Dalton. I'm the technical specialist for the Inter-American Institute for Cooperation on Agriculture. I work at the delegation in St. Vincent and the Grenadines, and today I'm here representing also Mr. Greg Rollins, who is the ECA representative in the Eastern Caribbean states. Huh? Yeah, sure. I know we have all had a very long day, and my intention is not to bore you with this short summary, and I say short. I have a tendency as I get older to be rambling a little bit, so the guys in the team have confined me to a prepared script. So I'll read from the script to avoid those sort of ramblings that I'm getting used to now. So good afternoon again. We had quite a full and fruitful day to mark the beginning of this quite frankly important regional seminar on agriculture and fisheries insurance. This afternoon, I had the task of highlighting some of the key takeaways from the proceedings today. And with that being said, I'll get right to it. And I'll aim to be as concise as possible to conclude today's presentation, or today's session. To start us off, the opening remarks delivered by Terry Bascom and Ms. Malgozata, Professor Malgozata Wasilewska, you will forgive me for the pronunciation, and Dr. Jadiscus Jules set the tone for the workshop and highlighted pretty much why agriculture and fisheries insurance is needed in the region. Mr. Bascom discussed the effects of Hurricane Beryl, where our fishery sector had an estimated $50 million Barbados in damage to the vessels and infrastructure, and $1.4 million damage, Barbados that is, in damage to the non-fishery sector. And Wasilewska went on to elaborate on the vulnerability of the region on a whole, especially being susceptible to these natural hazards as we are quite accustomed to. She also spoke on how the region is quite dependent on imports, which further makes it vulnerable and indicates a need for more local production of crops, livestock, etc. Dr. Jules highlighted specific examples, including Beryl's impact on Grenada, where they took on an 80% loss of economic activity at an estimated $148 million, which has been a severe setback to the agricultural sector. He later asked the question, how do we support not only in terms of the recovery, but furthermore, how do we build resilience to natural disasters that we are so prone to? Ms. Badaji, had the honor of starting us off with the first presentation where she discussed risk management strategies, and agricultural insurance. She defined risk, which manifests as both natural and anthropogenic hazards, and also went on to define vulnerability. She further discussed how they measure and quantify these elements. With regards to the topic of crop insurance, she highlighted how they target or insure specific crops, as well as how they target specific farmers within the environment with which she's familiar. She also elaborated on the advantages and disadvantages of the system that they use. Advantages such as safety of investment, guarantee of loans, etc. And disadvantages, for example, budgeting needs, as they must be planned for a long period of time for it to be feasible. Challenges to insurance was discussed as one of the key challenges being lack of technical capacity in agricultural insurance, especially as it relates to the analysis component. In the second presentation we had from Anna Maria Takis, a wonderful job was indeed done discussing insurance from a more quantitative angle. She discussed the risk production profile, where she spoke on natural hazard versus man-made disasters and weather anomalies. She later went on to provide equations such as the standard precipitation index, which predicts variability in precipitation, as well as the vegetation index and loss exceedance in curve. She also discussed new technologies that offer innovative ways for assessing crop losses, such as data collection, data processing, model development, and validation. The third presentation delivered by our representative from ECA, Mr. Alistair Glean, spoke to the market for agricultural insurance. Two types of insurance being used are indemnity insurance as well as the index parametric format. He also touched on the scope of insurance offered within the region. To talk a bit about the scope, he touched on micro insurance, which would be provided to small producers, meso-level insurance, provided to firms exposed to risk, and also macro level insurance, which obviously speaks to clients on a characteristically larger scale. The next presentation was done by the CRIF, which subsequently originated after CRIF, that is, originated after Hurricane Ivan. I think all of us in the region are quite familiar with its trail of devastating impact. CRIF boasts about being the world's first multi-country, multi-peril risk pool of funding, and also spoke on the timeliness and effectiveness, its own timeliness and effectiveness in delivering assistance, providing it no later than 14 days after an event. CRIF has been around since 2007. They have had to make as many as 75 payouts, totaling over $358 million. They have 6 products that they currently offer, and they use these to provide services across the member countries of CRIF. After the break, we had naturally Mr. Benyan Tadasi from the African Risk Capacity, who spoke on the African Risk Capacity established since 2012. They offer assistance in areas such as drought, tropical cyclones, and floods. Furthermore, ARC made payouts accumulating to over 125 million US dollars. So there's this facility in Africa as well too. FAO would have made several presentations here today. The FAO dealt with issues related to, since 2019, steps were taken, they say, by FAO in efforts to support fisheries insurance. Ms. Suchita Ope touched on some of the reasons why fishing vessel owners need third-party insurance. She identified the issue of piracy, environmental and pollution liabilities, collisions, as well as some of the reasons insurance is necessary in the areas in which she is working. She also provided a key statistic stating that 97% of the fishing vessels and assets are uninsured. They also spoke on facilitating the introduction of the course initiatives, supporting the cleanup and modernizing of fishing vessel registries and fishers across the globe. Moreover, Andrea Stopa and Mr. Roberto Sandoval, who also are from FAO, presented on implementing innovative agricultural insurance products in the Caribbean region. Mr. Stopa elaborated on indemnity insurance versus index insurance, indemnity policies being readily available and not needing complex design and testing, while index insurance products require much more design and testing. Mr. Sandoval briefed us on the key components or processes involved in disaster risk management. And these components were land use, planning, legal and institutional arrangement for DRM, livelihood recovery, and rehabilitation and risk transfer. And then finally, Mr. Granger from the WFP had the presentation today speaking on multi-country office approaches to disaster risk financing and potential links to agricultural insurance. So that is a brief on the presentations that would have been made today. We had some 8 presentations in all and a quite comprehensive effort in terms of the information that was put out. Now, I would just like us to look at a few takeaways that I've summarized. First of all, we have benefited here from a great sharing of experiences from Europe, from Africa, from here in the Caribbean and other parts of the world. We don't have to reinvent the wheel. I think that is what the presentations are telling us. There are others who have gone before us and done the work that we are attempting to do or to build on in the Caribbean region. And right here in the Caribbean, we have the organizations and the mechanisms that we can use to advance the cause for agricultural insurance to our producers, both in fisheries and in agriculture. But we have to understand, and this is my second point, that there are really significant gaps in the available data. We have to examine closely what those gaps are. Some came out in the presentations today. Tomorrow, I'm certain that we will be encountering others. And then we have to see then how we can move collectively to fill those gaps. So we have the experiences. We know that there are gaps here in the Caribbean and even in the regions that are advanced to us. We can also see from the presentation that there are gaps as well too, because nothing in humanity and human endeavors, nothing is really ever entirely complete. We always seeking to build and to advance causes. Beyond the data gaps, we also recognize there are other capacity gaps and lack of expertise widely across the agricultural sector when it comes to the issue of agricultural insurance. More than one of the presenters today was quick to point out to us that they were not experts in the field of agricultural insurance. I myself, as an agriculturalist over many years, this is one of the topic areas that we have not really emphasized much and that really needs our attention as we go forward. I'll tell you this parenthetically, and now you would see why the guys them wrote the script for me, because then I diverge a little. In St. Vincent, in our case, I had asked the Met Office for information on named storms affecting St. Vincent and Grenadines since independence, that is since 1979. So they sent me a list of hurricanes and tropical storms that would have affected us since then. And not surprisingly, and you know, the effects, it could be a side glance because oftentimes we don't get the full brunt of it. Not surprisingly, most of those storms were bunched up after the year 2000. Very, very significant. And I suspect that for the other countries, it will be similarly so. And that just points to the need for increasingly for us to pay attention to this whole topic area. The fourth point I want to make is that we all have a stake in this. That comes out in the presentation. The government, the multilateral organizations, the farmers' organizations, I know several of them are represented here today, and other parties within the private sector. All of us have a stake in this to advance this cause for agricultural insurance for the sector, not only for agriculture, but also for fisheries. And lastly, I just want to say that I sense from the gathering here today that there is a willingness for us to advance this cause. Some of my colleagues are saying, we have been down this road before. But I keep saying with each iteration, we advance we advance a bit. And I am confident, based on the exchanges we have had up to this point, that we will certainly advance significantly at the end of this forum and what happens after this forum as a result of this forum. So I want to end by thanking you. I want to thank Mr. Lynch as well too. He has had a full day, him alone, basically facilitating the technical session, for bearing with me. And all the best. We look forward to tomorrow.
Thank you very much, sir. It was a very insightful presentation. Let me thank everyone for attending. And yes, it was a long day, so I'm going to let you go, but let you know that tomorrow, again, those who have not registered will register from 8:30. At 8:30, and we'll start promptly at 9 a.m. But tomorrow we'll seek to be a little more stringent with time, and so that we do not repeat this late finish. Thank you very much, and let me wish everyone a wonderful evening. And let me also remind you that could you pass on the cards, the that was distributed in the early afternoon, the beginning of the afternoon session. Will be, please send it forward so that we could collate your comments and be a little more effective in this most important endeavor. Once again, thank you everyone and have a great evening. And if anybody in Barbados is driving home, safe journey. Thank you.